Hello traders and investors, it's Trend Trader here. Today I want to show you how you can use technical analysis to capture large moves. The advantage of technical analysis is that you can just use price and volume analysis to make trading or investing decisions. Unlike fundamental analysis, where you have to know something about the business, what the company does, who's the CEO, and be able to understand a couple of things from the company financial statements. With technical analysis, we just focus on price volume analysis. Although technical analysis differs, there are many ways to do it. You can use technical indicators. You can just analyze price and volume using what is called naked charts, where you don't have indicators. The purpose of this video is not to say that technical analysis is better than fundamental analysis or fundamental analysis is better than technical analysis. As a trader or an investor, you just have to choose the kind of analysis that you are comfortable with. And also keep in mind that you can combine technical analysis and fundamental analysis. But as for me, because I don't have a background in commerce, I don't understand a lot of things in the finance section. So I only use technical analysis, and so far I've had a good set of results just by using technical analysis. So the stock that you will be discussing is PPC. A lot of people bought PPC for different reasons. Either they were following the conventional wisdom of buy low, sell high, or they were using chart patterns, or they did fundamental analysis. They found that the stock was interesting. The reason why you bought PPC does not matter. What matters is that you bought PPC and you captured last week's move. In our case, we use technical analysis to capture about 135% return from PPC. It didn't happen in a matter of days because we had the stock a couple of months or even weeks just before the upward move we saw. So now let's look at the chart of PPC. So now if you look at the chart, if you've been following this channel for quite some time, you know that I usually buy stocks that are breaking above the 200-day moving averages. And if it's the first time you're watching this channel, please click the subscribe button. If you find value in the content of this channel, please click the like button. And just to make sure that you don't miss any of our analysis, click the bell icon so that you'll be notified every time we post a video. Okay, so now we were seeing a lot of people were talking about PPC as of last year, but at that time we were not interested because it didn't meet our buy criteria. So what we saw, PPC at that time was trading somewhere around 60 cents per share, but then it went down. The lowest it traded last year was around 40 cent or about 30 cent, 39 cent per share. That was around November 5, 2020. That is when PPC started to bottom, and then from there it started to rise up. But when it caught our attention was when PPC first broke out of this level. So this was the resistance level here, around 96 to 1 cent, 1 rand, not 1 cent, to about 1 rand per share. So what we saw that when PPC came to this level, then it got our attention. As you can see, around March 2020, it came to this level. Then this level became support. It tried to trade above this level a bit. It came back, but instead of finding support, it broke lower. Then it came back. usually we say that a support can turn into a resistance level, of which this is what we saw here around May, after May, June. Uh, this 1 rand level now became the resistance level. As you see that it consolidated a bit near this region and then it attempted to break above. But if you look at the volume, there wasn't a lot of volume to support that breakout. So that breakout, it failed. Then the stock came back and then started to trade, or it continued to trade below this resistance level, of which then we didn't have a position because to us it was still on a downtrend. And then it reached this level here. You can see that there is a bit of a volume that tried to push the stock high, but this volume was there wasn't a lot of volume. And then it continued to trade lower until it finally bottomed here around this level, and then started to trade higher. And then, as you can see, there are some large spikes of volume. What we want you to pay attention to is that when it reached this a bit of a consolidation, it broke above this level, but it broke above with a large volume. You see, this is a large spike of volume compared to the other previous volume besides this selling days. So now this is an indication now that there is an interest in this stock. People are starting to accumulate this stock. So now it continued to trade higher following this large volume breakout, and then it consolidated again near this resistance level. So if a stock starts to consolidate near a resistance level, one thing that you want to focus on is the volume. Are there buyers or sellers near that region? What you see for a couple of days, there are some buyers. The buyers we can see from the green candles, and then in those few red days where the stock traded lower compared to the previous day, you see there's a volume dry up. The red candles are no longer as large as compared to the green candles. And then let me change to the mouse because I want to see the date. When the stock broke out around December 4, what we see there, the stock broke above this level. You see here, there is a large volume to show that this breakout, there are more buyers that are buying the stock. So that is when we bought our first batch of PPC. So it tried to trade a bit higher, but then started to consolidate. And then let's put in a 200-day moving average. As you can see, like we mentioned earlier on, we usually buy stocks that are breaking above the 200-day moving average, because a stock that is trading above the 200-day moving average is more likely to continue to trade high, as opposed to a stock that is breaking above the resistance level but is trading below the 200-day moving average. So around this time, when the stock broke above this level, also it broke above the 200-day moving average. On the first day, it was still below the 200-day moving average, but on the second day, it was now trading above the 200-day moving average. And then when it closed above the 200-day moving average, that is when we sent a communication to our members to say that, okay, now we are interested in this stock because it's currently trading above the 200-day moving average. So since December 5th, we've been holding PPC in our portfolio. But now I want to show you the other analysis that we're looking at, because now after the stock breakout, besides these days, then started to retrace to this level. So now what we wanted to see is the low of this retracement. Is it lower to that previous low, or is it higher? We saw that this low is higher than this breakout level. And also, if you look at here, it found support, even though it's not a large pronounced volume, but there was some volume to support that retracement, and finding supported the 200-day moving average. Then it started to trade higher. As you can see here, it broke above this recent high, which was higher. Even the retracement, the low of this retracement was higher than this previous low. And also, if you see here, there is a volume, large buyers at this level. Again, this shows that there are more buyers than sellers in this stock once again. And then it started to trade near 2 rand per share. This high again was higher than this previous high. So what we see now is a series of higher highs and higher lows. So now we are sort of confident that the stock is on an uptrend, and now we are even more interested on this stock. And then another thing to keep in mind, what happened is that somewhere around the 25th of Jan, we saw the 50-day moving average crossing above the 200-day moving average. All along, the 50-day moving average was below the 200-day moving average. And then around the 25th of January, it started to trade above the 50-day moving average started to be above the 200-day moving average. Again, that's another sign of an upside move. It shows that now people are more interested in this. The stock is in a sustained uptrend. So once you start to see these characteristics, you want to be invested in this particular stock. Okay, it continued from this swing high, it retraced. Now what you see, because the 50-day moving average is now above the 200-day moving average, we expect the stock to first find support there. So of which it did, it found support on the 50-day moving average. And then now here, the interesting part is that after it found support, it started to consolidate to form this small consolidation pattern. What we want to see, if the stock is above the 200-day moving average and it is consolidating, we call that forming a base. During that base formation, we want to see the dry up of sellers. We still want to see a lot of buyers coming into play, but we want to see less and less sellers to show that now the buyers are in control. The stock is no longer on the downward trend. Now you see the volume, it's starting to decelerate a bit. Now, as the volume starts to dry up, this consolidation, it becomes tighter and tighter. We once spoke about the VCP, which is the volatility contracting pattern. As we said previously, the more you use chart, the more you trade, the more familiar you get to different patterns to be able to identify these patterns. And if you have seen it before and how that stock played out, it's easy that when you see it the following time, you will have an idea of what to expect. We're not saying that technical analysis is a tool or it's a predictive tool. Some people use it to predict market movement. I use technical analysis as a reactive tool, not as predictive. So now when you see a volatility contracting pattern, then we expect an explosive upward movement. In this case, we were lucky because it did happen. Nothing is guaranteed in the market. You can expect something, but it might not happen. So luckily, in this case, it did happen. So now what we saw following this, so there's this consolidation. So now what we want to see the stock break above the resistance of this contraction. But what we want to see it breaking above this level with a higher proportion of buyers, meaning that in terms of volume, we want to see an increase in volume. And then it did exactly that. The first breakout, which was on, let's see, this was Monday, Friday, Thursday, Wednesday, Tuesday. So on Tuesday, when the breakout happened, there was a volume. If you look at this volume, it's higher than the previous day volume. It shows that there are more people who are interested in buying the stock compared to the sellers. And then the following day, the stock went to another higher level, which was equally to this level. So we already had the position, we're already long here. Now we're just monitoring how the stock is going to happen. And then the following day, that is when it just exploded all the way high. Then it traded above 250 per share. But you must note that the volume on this day was higher than the previous volume. And then on Friday, the stock, for the first time after a very long time, it traded above 3 rand per share on volume. So now when that happened, that is when we realized 135% return on the stock. So we were not expecting any kind of return. So we bought the stock here. Currently, we still have the stock. It's trading around 280 per share. So that's about 138% return on PPC alone. And then that took about 120 days, which is about 3 months for it to happen. So we're still holding this position because the reason why we are holding this position, the stock is still trading above the 50-day moving average. Also, the 50-day moving average is above the 200-day moving average. And as you can see, now the 200-day moving average is bending upward. So for yesterday, the stock, as much as it reached a bit of a higher price, let me zoom in a bit. So you see the range of the yesterday's candles is somewhat equal to the Friday's range, but you look at the volume of sellers. We're not saying that people were taking profit because this explanation of what was happening at the end of the day, they are not smart decisions. They are just they are just dumb reasons. But yesterday was a red day with a smaller volume compared to the Friday's volume. So at this moment, we are still confident that we still have more buyers than sellers. So we expect the stock to continue to trade higher. If you missed this run, how you can play this is to wait for the stock to trade above this above this level. So if it breaks above this level, then you can set your stop loss somewhere near here, which is just going to be the multiple ATR below this level. Then this will then be your risk that you'll be taking on this stock. But there's no need to chase the market. Every time you want to buy a certain stock, we always say this: you must buy near an area of value. Basically, an area of value is a place whereby if the stock reverses and then it goes below that area, it means that your analysis or the move that you want to see is incorrect. And as for us, because we are traders, we always use a stop loss. Maybe some people they don't use a stop loss, but if you use a stop loss, you must always set it just below an area of value, because then that means that your analysis is incorrect. So yeah, this is just an example to show you that you can use just technical analysis alone to be able to capture a large movement in the stock. You don't need to know anything. You don't need to read the financial statements. There are many ways to do your own research. Technical analysis is another way to do your own research. And as you can see here, the stock were able to capture about 138% return on this simply using technical analysis. The other people who used other kinds of analysis, they captured the same move. So which then goes on to highlight that there's no right way to do it. There's just your way, the way that you're comfortable with. And if you continuously use your way, you have a fair chance to succeed, because all it takes is discipline and risk management. Really, we don't believe that there is one perfect way to invest or to trade in the stock market. So we hope that in this video, we're able to show you that you can use technical analysis to capture large moves, as we have done with PPC. We still have our PPC position. So we are still bullish on the stock. We don't know how far it will go, but for as long as it's going up, we're still going to be holding this stock. So that's it for today. We hope that we're able to help you to understand technical analysis a bit and how you can use technical analysis to capture large moves. And once again, we'd like to ask you that you click the subscribe button. And if you enjoyed this video, please click the like button, because that will help this video to reach more audience. And if you don't want to miss any of our analysis, click the bell icon so that you'll be notified every time we post a YouTube video. Thank you.